Welcome, everyone, to Financial Mo. Today, we're diving deep into the world of investments, comparing two popular options: guaranteed investment certificates, GICs, and mutual funds. I'm Mo, and let's get started. Introduction. To kick things off, let's understand the basics. GICs are low-risk, fixed-term investments where you lend money to a financial institution in exchange for a guaranteed return. On the other hand, mutual funds pool money from multiple investors to invest in a diversified portfolio of stocks, bonds, or other securities. Advantages of GICs. GICs come with the advantage of capital preservation. Your principal investment is protected, and you know exactly how much you'll get at the end of the term. They're ideal for risk-averse investors or those with short-term goals like saving for a down payment. Example. Let's say you invest $10,000 in a 2-year GIC with a 2% interest rate. At the end of the term, you'll have $10,400. Disadvantages of GICs. However, GICs have their drawbacks. One major downside is the limited potential for returns. While your money is safe, you might miss out on higher returns available in the market. Example. In the same 2 years, if you had invested in a well-performing mutual fund, your returns could have been significantly higher, but with added risk. Advantages of mutual funds. Now, let's shift our focus to mutual funds. One key advantage is diversification. Mutual funds spread your investment across various assets, reducing the impact of poor performance in a single investment. Example. If one stock in the mutual fund underperforms, gains from other stocks can offset the losses, providing a balanced approach to investing. Disadvantages of mutual funds. On the flip side, mutual funds carry the risk of market fluctuations. The value of your investment can go up or down based on the performance of the underlying assets. Example. Imagine you have a mutual fund with 70% stocks. If the stock market takes a hit, your investment could experience a temporary decline. Suitability. Suitability is crucial in choosing between GICs and mutual funds. GICs are suitable for short-term goals and risk-averse investors. Mutual funds, with their potential for higher returns, are better suited for long-term investors with a higher risk tolerance. Pros and cons recap. Let's recap. GICs offer safety and predictability but limit your potential returns. Mutual funds provide diversification and growth potential but come with market risk. In conclusion, whether you opt for GICs or mutual funds depends on your financial goals, risk tolerance, and investment horizon. As always, it's crucial to consult with a financial advisor before making any investment decisions. Thank you for joining us today on Financial Mo. If you found this video helpful, don't forget to like, share, and subscribe for more insightful content. Until next time, happy investing.